we're bringing our expert in studio to share a little bit about how do you actually do that. She is Leticia Turchin. She is the Assistant Vice President of Immigrant Savings Bank. She is also been there for 9 years, a certified insurance and annuities agent, and in the banking industry for 20 years. Also on the financial board of the Archdiocese, as well as the Westchester chapter of 100 Hispanic Women. And thank you, Ms. Turchin, for joining us.
Thank you for having me.
When we talk about this, we've heard from the people exactly what their perspective is in terms of trying to survive during these tough economic times. And the word on the street is it'll probably be about 2 years before things get better, and that can be debatable. But how do people go about, in a tough time like this, I guess, judging how to save and when to spend in an economy such as this?
Well, everybody has a different perspective, to use the name of your show, on how to deal with this kind of situation. What I have come to advise my customers is they need to budget. And everybody hears that word a lot. You throw it a lot around when you speak. But budgeting is one of the basic things that, that's going to get you through this economy. Because you have to know what you have, what bills you have, how much do they come up to at the end of the month. What do you have to spend for luxury items, for leisure, for family? You don't want to deprive yourself, because the more you deprive yourself, the more depressed you become. When you get depressed, stress, it creates problem on top of problems. So I advise my customers to budget. And one of the easiest ways to budget is to separate your planning financial future. So you're going to save by having an account for your home expenses, and then having an account for your savings, and such as a vacation account, right? You put $20 in there a week, you'll have $1,000 by the end of the year.
Right.
If you want to go somewhere that's going to cost you more, you put 40. You put as much as you can. We don't tell you how much. You can put $2 in there if you want, but you're saving towards a goal. So you do that for Christmas, you do that for vacation, and the most important thing that I think applies right now is not using your credit card.
I think that's one of the most important things.
Do
I think
not.
right now.
And you know what? With this economy, you see a lot of people. I see them when I go, get my lunch, charging their lunch. So you're paying for a $5 lunch 24%. Okay? Obviously, you're charging your lunch because you don't have a budget in plan, and you're going to struggle because that interest is just going to keep compounding and compounding. You're never going to catch up.
Let me ask about this, because a lot of people are into the habit of using debit cards during a time such as this. Smart move?
That's the best thing to do, a debit card, because you know exactly how much money you have in your account, exactly how much you're going to spend. And it's so much easier to control it, because if you know it's coming out of your money, you'll think about it twice before you get that $40 shirt, as opposed to saying, you know what, I can wait on that, another week, or I can wait till it goes on sale. As opposed to a credit card, you go, I have it in there, bam, and you spend it. And you should know exactly what that $40 entails. How many hours a week did you work for that $40? Calculate it that way, so that when you buy that shirt, you say, let me see, I worked 4 hours to get that, and that's coming into my budget, my household expenses. Is it worth, 4 hours of hard work if you get paid $10 an hour?
And then by the time you do that kind of math, it'll make you think about what you're actually doing.
Definitely.
Talk to me about, as we said, you're the Vice President of Immigrant Savings Bank, a bank that specializes in savings.
Definitely.
Are we seeing a lot more people come in and using savings banks during such a time as this?
Our deposit base is pretty loyal. We do have people coming in from other institutions because we have the kind of service that they're looking for now. Again, we're going back to the economy. The questions that they want answered, when they call the bank, they get an automated system. They call me, I can tell you what the problem is. Right there, I can look at your account, once I verify who you are. Of course, you have a privacy issue. But we are more in tune with our customers. I know their history, they know me. So it kind of, that kind of means a lot nowadays when you're so uncertain about where your money's going. As a savings bank, we're privately owned, and that's what we cater to. We're not a big bank, so we cater to the customer.
And a lot of people, when the AIG thing fell out, and there was a whole lot of questions panic about my money. What's going to happen with my money? Now, let's just get people up to date for sure. We know that their money was insured up to $100,000, and then the government moved it up to $250,000.
Yes.
Okay,
but that has nothing to do with AIG. Okay?
I know, yeah.
Okay, that's a big confusion between products. You know, they're very separate entities. AIG is an insurance product. It's it's guaranteed by an insurance company, okay? And that's dollar for dollar. A lot of people don't understand that about annuities, is when you open an annuity, you give me $5,000. I put it into an account, okay? I don't want to throw out names because I don't want to be biased, but let's Star Annuities. I opened up this $5,000. Star Annuity now has to match that $5,000 that you put into that annuity with $5,000 of their own and match the interest. So you are safe. You are 100% guaranteed on your money. Worst case scenario, you might lose some interest in the worst case scenario, okay? But you'll still have your initial deposit. And it's one of the best ways to save. One of the best things to do in life is an annuity. Really
Talk to us a little bit about the annuities.
Okay, you have different products for different needs. So after we speak and I get to know what it is that your goals, your financial situation is at the present time, and where you see yourself in the future, then we can start talking about the different product types. And they range from, they could be from 4 years to 5, 6, 7 years. So you're earning this interest that you lock it in for, again, it depends on the product. You could lock in, let's say, a 4.25, which is a very good rate right now on a 5-year annuity for 3 years. So for 3 years, you're getting that 4.25, which you're not seeing now. Interest rates are at a record low. Okay, so you're guaranteed that 4.25 for 3 years. All right, and then it'll tell you on your contract that minimum interest that you will earn on this will be 3%. Still way better than any other product that's out there right now, unless you're going to go into a CD.